Alrighty guys, what is going up? Welcome back to another episode. In today's episode, we're going to be talking about the S&P 500, why it's only around 1% off those highs, what that means for investors, and how to overall make some money. So I hope you guys enjoy it, and overall, I hope you guys learned something. And if you guys get anything in value out of this video, please repay me with a huge like. It's greatly appreciated. And make sure you guys subscribe to the channel if you aren't already. So now that jump into it, roll the intro guys. Let's go. I hope you guys enjoy it. Bam! So now in March, the S&P 500 did fall around 41%, and this all happened in around 18 days, and it wiped out around 3.5 years of total gain. But now, how is it already up around 40%, almost hitting highs? How is it up so much? Well, during that fall, the Fed said, hey, we need to figure something out. So what they did is they went ahead and lowered interest rates, and they dumped trillions of dollars back into the economy. Now, during this time, Robinhood said they had a record number of people sign up on their platform, which made a lot of people want to invest during this hardship. But why is it up so high? Why is it only 1% off those highs? Well, let's look at it. Number one, the coronavirus death toll has completely slowed down, which for American people, that's great. That's the news we needed to hear. Number two, the market represents the future, not the past. And people need to understand that when investing. Why do you think Tesla stock price is up so high? And why do you think it's more valued than any other car company out there? Because Tesla represents the future of automobiles. And that's kind of how the S&P 500 is. A lot of people think, okay, once people start going out, everything's gonna kind of get back to normal. And yeah, that's a good way to look at it. Number three, a cure. A lot of people and a lot of companies have been working on a COVID-19 cure, and there has been some promise with it. Now, there is glial sciences that have been working on this, and they really figured out a way to make it a non-deadly virus, which is great. And in Russia, they claim they have a cure for it. But for the American people to get it, it's gonna actually have to go through the FDA and go through a ton of regulations to make sure it's safe. And during this time, we did have a lot of tech stocks absolutely soar up because people are actually spending more time online than ever before. And a lot of retail stores or brick and mortar stores had been slammed down, which made REITs, which are real estate ETFs, get slammed down extremely hard. So a lot of brick and mortar retail stores and real estate stuff have been slammed down, which for investors may seem like a good opportunity to buy them, which is great. So now the biggest question that you guys probably have is, should I wait to invest? Should I wait to buy? Should I wait to sell? Should I hold? What should I do with all my money and all my investments? Well, keep buying. The best strategy out there that you can use to not time the market is a strategy called dollar cost averaging. Really what this strategy is, it's super simple, is you go ahead and you invest a certain number of dollars every single month into the market. What this does is it actually goes ahead and you guys get to buy during the down times, the up times, and so you get a good average price. And so if everything continues to go up, just like it has for over the past 50 years that we've seen the economy in the S&P 500 go up around 10 to 12% per year, you guys will be fine. You guys are investors, not traders. So what that means, investors have a more long-term approach to investing. And as traders, you have to be in and out of positions as fast as you can to make, scalp trades and make your money that way, which is completely fine, but it's just a different approach. So for long-term investing, don't look at it day to day. Don't even look at it week to week. Go ahead and put your money into the S&P 500 index. You guys will be fine. Here's a good list of ETFs that have a low expense ratio and is just an overall beast to get into. Those were the ones that I recommend. But what is the S&P 500? The S&P 500 represents the top 500 companies that's publicly traded in the market. Here's a whole list of them. So when you guys invest in that, you really are investing in the overall American and United States economy. So you guys just have a broader outlook to it, and it's just the best investment that you guys can do. So that is it though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and overall stay safe out there. We'll see you guys tomorrow. Take care. Bam!